sounds like both sides really want something to be done. And you know, there are puts and takes in our economy, in the U.S. economy. There are good things that are happening. I mean, just listen to what a lot of the industrial companies said today, not just the airlines.
That's
but
right.
The rails did very well. The defense stocks are starting to perk up a little bit. So I think, and then if you kind of layer on in the semiconductor world, I always find it very interesting to see the reactions to earnings, because that really is the tell, right? And I was encouraged a couple weeks ago with the banks. The banks actually rallied on okay news. And then today you had the semis, and there were some really great ones, Xilinx and Lam, but there are some okay ones that also rallied. And I just think that that's very telling that the risk appetite is back, and that people may be looking at kind of the positives versus the negatives of the U.S. economy.
Let's dive in to the topic of China trade a little more detail. Earlier on Squawk Box, U.S. Commerce Secretary Wilbur Ross was asked where we were in the process of getting a deal with China.
We're miles and miles from getting a resolution, and frankly, that shouldn't be too surprising. Trade is very complicated. There are lots and lots of issues, not just how many soybeans and how much LNG, but even more importantly, structural reforms that we really think are needed in the Chinese economy.
Mike, last couple of days we've seen a sort of story repeat itself, negative headlines about the China likelihood of a China trade deal, and then Larry Kudlow comes out and says, don't worry about it, yes. It's all optimistic. But I guess the fact that the market isn't selling off more is quite encouraging.
It's encouraging. I do think that there's a standard baseline assumption that some kind of an agreement is likely. But I think one of the reasons the market is hesitant is that there's almost no way to handicap this process. You almost literally have to read the minds of 2 or 3 people in the world to know what is going to be a satisfactory deal. So that's why I think you have the back and forth. The market's reacting less both to the positive and the negative headlines on China, because we simply don't know what it means for an ultimate agreement.
Yeah, and Ed, longer term, and this is going to be one of the key things to focus on, is what happens in terms of structural changes where tech is concerned, right?
So, right, I think that's a huge, huge issue for them, for the two sides to work out. I think that's the most difficult issue. I think if they're going to be concerned about trade, we know both China and the U.S. are going to slow down this year. So we don't know what's in the minds of these guys, but they all see the same numbers. I think, you work out trade on things like autos, tariffs, steel, soybeans. That's easier than getting to the structural issues around technology and spying and all that kind of stuff. And I think that's going to be the thing you probably push off a little later. Do the easier thing first. We're talking about, government shutdowns, open the government, then we can talk about the wall kind of a thing. I think there's a similar dynamic that could play out with China trade as well.